It says for much of the past 3 years, the U.S. housing market has felt frozen in place. Millions of homeowners who locked in mortgage rates below 3% during the pandemic era, boom, have been reluctant to sell, knowing that any move would likely mean trading a historically low monthly payment for a far more expensive one. That dynamic, known as the lock in effect, has been one of the biggest forces constraining housing supply. Okay. So that's been a fact of the past few years. Okay. That's not wrong. That is very true. Myself included and many others will be like, look, I'm not going to sell. I've got a crazy good interest rate right now, and I'm paying more equity on my home against principal than I ever have. Right. So it's really hard for me to want to sell my house. Okay. That's fair. Now, it goes on to say, but new data in early 2026 market signals suggest that the grip of that effect may be starting to loosen. Mortgage rates have eased from their 2023 peaks, right? Remember, we go back to then, it was like 7.5, in some cases, right? So even if they remain well above the ultra low levels of the pandemic years, at the same time, more homeowners now carry mortgages closer to today's rates than to yesterday's bargains. Together, those shifts are starting to change both the financial math of moving and for some sellers, the mindset around whether it finally makes sense to list.